Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourself, Banking and General Knowledge, etc. Today I am going to describe about ITR return filing due dates for FY 2025 to 26, AY 2026-27, complete guide for taxpayers. Introduction. Filing an income tax return (ITR) within the prescribed due date is one of the most important responsibilities of taxpayers. Timely filing not only helps taxpayers remain compliant with tax laws but also enables faster processing of refunds, easier loan approvals, and avoidance of penalties and interest charges. The due dates for filing ITR vary depending on the category of taxpayer, nature of income, and whether an audit is required. For the financial year FY 2025-26 corresponding to assessment year AY 2026-27, different filing deadlines have been prescribed for salaried individuals, professionals, businesses, companies, firms, and entities involved in international transactions. Understanding these deadlines can help taxpayers avoid unnecessary complications and ensure smooth tax compliance. First, due date 31st July 2026 for salaried individuals and non-audit cases. The first major deadline for filing income tax returns for FY 2025-26 is 31st July 2026, Friday. This due date generally applies to individual taxpayers and Hindu undivided families (HUFs) who are not subject to a tax audit. The following ITR forms are generally applicable under this category. ITR 1 Sahaj. ITR 1 is commonly used by resident individuals having income from salary or pension, one house property, other sources such as interest income, agricultural income to the prescribed limit. ITR 2. ITR 2 is generally applicable to individuals and HUFs who do not have income from business or profession, have capital gains income, have income from multiple house properties, have foreign assets or foreign income wherever applicable. Who should file by 31st July 2026? Salaried employees, pensioners, individual taxpayers, HUFs, investors earning capital gains, taxpayers not requiring audit. For most salaried taxpayers, this is the primary deadline and should be carefully noted to avoid filing consequences. Second, due date 31st August 2026 for presumptive taxation and certain business taxpayers. The next important deadline is 31st August 2026, Monday. This date generally applies to taxpayers filing ITR 3. ITR 3 is used by individuals and HUS having income from business, profession, proprietorship concerns, trading activities, consultancy services. ITR 4 Sugam. ITR 4 is meant for taxpayers opting for presumptive taxation schemes under Section 44AD, Section 44ADA, Section 44AE. Who falls under this category? Freelancers, consultants, doctors, architects, small business owners, traders, professionals using presumptive taxation, non-audit business taxpayers. Presumptive taxation schemes simplify tax compliance by allowing taxpayers to declare income at prescribed percentages without maintaining extensive books of accounts subject to eligibility conditions. Third, due date 31st October 2026 for audit cases. The due date of 31st October 2026, Saturday, is applicable to taxpayers whose accounts are required to be audited under the Income Tax Act or any other applicable law. Relevant return forms include ITR 3 for business and professional taxpayers requiring audit, ITR 5 applicable to partnership firms, LLPs, association of persons, AOPs, body of individuals, BOIs, other eligible entities. ITR 6 applicable to companies other than those claiming exemption under specific provisions. ITR 7 applicable to trusts, charitable institutions, political parties, educational institutions, religious organizations, other specified entities, taxpayers covered, companies, partnership firms, LLPs, businesses requiring tax audit, professionals subject to audit, other audited entities. Since audited entities require preparation of financial statements and audit reports before filing returns, they are granted a longer filing timeline. Fourth, due date 30th November 2026 for transfer pricing cases. The final major filing deadline is 30th November 2026, Monday. This due date applies to taxpayers involved in international transactions, entities entering into transactions with associated enterprises located outside India, specified domestic transactions, certain domestic transactions covered under transfer pricing provisions. Transfer pricing compliance. These taxpayers are generally required to maintain transfer pricing documentation, obtain transfer pricing reports, comply with additional reporting requirements. Taxpayers covered multinational companies, companies with overseas group entities, businesses having international transactions, entities covered under transfer pricing regulations. Because of the complexity of transfer pricing documentation, these taxpayers receive additional time to complete compliance requirements. Important post filing deadlines. Apart from the original due dates, taxpayers should also be aware of the important extended timelines available under the law. Belated return. Last date 31st December 2026. A taxpayer who misses the original due date can still file a belated return. Benefits enables compliance even after missing the due date, helps avoid more serious legal consequences. Drawbacks late filing fees may apply, interest liability may arise, certain tax benefits may be restricted. Therefore, filing within the original due date is always preferable. Revised return. Last date 31st March 2027. If a taxpayer discovers any error, omission, or incorrect information in a return already filed, a revised return can generally be submitted up to 31st March 2027. Common reasons or revision include missing income disclosure, incorrect deductions claimed, errors in bank account details, wrong reporting of capital gains, mistakes in tax computation. Timely revision helps taxpayers correct mistakes and avoid future notices or disputes. Late filing fees and interest implications. Late filing fee. If the return is filed to the applicable due date, a late filing fee under Section 234F may be levied. The information provided indicates that the fee can be up to rupees 5,000. The actual amount depends on factors such as date of filing, taxpayer category, total income level, applicable legal provisions, interest liability. Interest may also be charged under Section 234A for delay in filing the return, Section 234B for short payment of advance tax, Section 234C for deferment of tax installments. These interest charges can increase the overall tax liability and should not be ignored. Impact on loss carry forward. One of the most significant consequences of late filing relates to the carry forward of certain losses. If eligible returns are not filed within the prescribed due date, business losses may not be allowed to be carried forward. Capital losses may lose carry forward benefits subject to applicable provisions. Future tax planning opportunities may be adversely affected. Taxpayers with investment losses or business losses should therefore be particularly careful about meeting filing deadlines. Foreign asset and foreign income disclosure. Taxpayers who hold foreign assets or earn foreign income must ensure proper disclosure in their income tax returns wherever applicable. Examples include foreign bank accounts, overseas investments, foreign shares, foreign property, income earned outside India. Failure to disclose such information may attract penalties and scrutiny under applicable laws. Therefore, accurate reporting is extremely important. Why timely ITR filing matters. Filing the return on time offers several advantages, avoids late filing fees and interest, ensures smooth processing of refunds, helps maintain financial credibility, facilitates loan and credit card approvals, supports visa applications, enables carrying forward eligible losses, reduces chances of notices due to delayed compliance, maintains a proper tax compliance record. Timely filing is not merely a legal requirement but also an important financial discipline that benefits taxpayers in multiple ways. Conclusion: the income tax return filing schedule for FY 2025-26, AY 2026-27 provides different deadlines based on the nature of the taxpayer and the complexity of the return. Salaried individuals and non-hourly taxpayers generally need to file by 31st July 2026, while business and professional taxpayers under presumptive taxation may have a deadline of 31st August 2026. Audit cases are required to file by 31st October 2026, and entities covered under transfer pricing provisions have time till 30th November 2026. Taxpayers should prepare documents well in advance, reconcile income details, verify tax credits, and file their returns before the applicable deadline. Early filing helps avoid last minute issues and ensures a hassle free tax compliance experience. Disclaimer: this article is intended solely for general informational and educational purposes. The applicable income tax return form, due date, eligibility criteria, audit requirements, late filing consequences, and disclosure obligations may vary depending on individual circumstances, and future amendments to tax laws, rules, notifications, or circulars issued by the Income Tax Department. Taxpayers are advised to verify the latest provisions from official government sources and consult a qualified tax professional, chartered accountant, or tax advisor before making any tax related decisions or filing their income tax returns. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.